Hey, what's up guys? My name is Justin Furniel, and in this video we're going to go over one of the most basic indicators when it comes to investing in the stock market, and that's going to be the support and the resistance. Now I know there's a ton of videos about this online, but what I wanted to do is I wanted to take my experience and my knowledge when it comes to investing in the stock market, and I kind of wanted to make a video about this topic and consolidate the information and make it more concise so that the average person, no matter whether you're a beginner or what age range you are in, can invest in the stock market. I definitely feel like this is something that everyone should be doing, especially with all the tools and resources available online. Anyone could do this part-time to just make some side income, or eventually if you want to scale this up to a full-time thing. So yeah, we're just going to be going over, like I said, the support and the resistance, and we're just going to hop into my computer screen, and I'll explain it a little bit better. Okay, so we just hopped into my computer screen. Right here I just have this drawing. I figured I'd make it a little more simple with this drawing that I made, so I could explain more about supports and resistances. And then after we go over the drawing, I'm gonna hop into my brokerage account. I use TD Ameritrade to chart and trade. And then once I'm over there, I'll show you some more examples of supports and resistances, but with some real stocks. But just to make it a little more simple, I kind of just wanted to go over this drawing. Not the best artist, I'm not an artiste, but this will do for right now, just to explain the basics of it. So the black line right here, that if you follow the cursor, we'll just pretend this is the price of a stock, right? In the stock market, prices fluctuate, they go up, they go down, right? And one of the most basic indicators when it comes to trading in the stock market is just setting up supports and resistances, right? So let's just follow it from the beginning. So we see right here, if you're following the mouse again, the stock will go up, and it'll kind of hit a plateau, right? And this is what we would for example call a resistance. It'll hit it and it'll start coming down, and once it hits it again, because it was a resistance, it'll kind of fall back down again, and eventually, if the stock is in an uptrend, it'll break through that resistance. And then once you break through resistance, it generally becomes support. So it'll establish a new resistance right over here at this red line. Will kind of go down, have trouble breaking above it, because it's almost like a ceiling, right? And then once it starts coming down, the old resistance or the previous resistance eventually becomes support. So if you're buying long, or you just want to buy low and sell high, you would want to buy at the support and sell at the resistance. So we see here in this pattern that I drew of this imaginary stock, um, it fell down, and we would establish this as a support because it was previously resistance. You would want to buy here, and then eventually sell over here because you've seen that it had trouble breaking above this as a resistance. And then once you sell there, the stock will probably come down a little bit, and eventually, if the stock is still in an uptrend, it'll break through this resistance and kind of have a new resistance, and eventually when it comes back down, this resistance will become support. Now if that was confusing, don't hesitate at all, don't feel bad. You could definitely hit the 10-second button on YouTube to go back to rewatch this. But also don't get discouraged. I'm also going to show you some real life examples with some stocks. So let's head over to my TD Ameritrade account, and we'll take a look at a real stock. Okay, so now we just headed over to my Thinkorswim platform, or just the Thinkorswim platform. This is where I chart, this is where I trade, I buy and sell stocks. I know it could be a little overwhelming, there's lines all over the place, it's crazy. But we're not going to focus on everything on the screen. We're just going to, like I said in this video, focus on supports and resistances, and kind of just go through the basics. There's a ton of other indicators that you're going to want to use along with setting up supports and resistances when day trading or just investing in the stock market. But just for the sake of this video, we're just going to stick to supports and resistances. So the stock that we're actually going to take a look at right now is Amazon. I chose Amazon just because I'm sure most people are familiar with their stock, or not even with their stock, just familiar with the company. I'm sure most of us have, ordered something on Amazon, and if you haven't, then you should order something. No, I'm just kidding. But I already drew like a support on this chart. So if you could see the red line right here, now I didn't draw it exactly perfectly how I'd want to draw it. I just kind of did this real quick. But if you're setting up a support or resistance on your chart, you're definitely gonna want to kind of like make it a little more neater. So if you could see, Amazon at one point was on a downtrend. This is on 7/31/2019. I believe that's August. So on August 5th, it kind of hit this line. It went up and kind of hit back down on this line, right? So that's why I would establish this as a support, because after it hit this line, it bounced back up. So right there in my head, I'm like, okay, this seems like a valid support. It has validated itself already. And I would say that you would want to say something as a support is if it validated itself 2 or 3 times, right? Um, that's how I see it. Again, some other people disagree. They might say it has to validate itself 3 times. Um, it's up to you, right? So if I was looking at Amazon and I would say, okay, so it hit this low over here, it went up, it hit this low again, and it went back up. What I would wait for would be to have that pullback, so it hits around the support area, and then that's when I would go ahead and buy some shares of this company, and then I would wait to sell at the resistance. Now, where's the resistance? We'll go ahead and draw a line together. Um, so I would say, and again, I'm not gonna do this like really neat. This is just for the sake of the video. I would say that around this area would be the resistance, because if you could see, when it hit this support, it hit the ceiling of the resistance, kind of fell back down, hit the ceiling of the resistance again, not breaking above it, kind of fell back down to the support area, again hit this resistance, fell back down to this area of support. And then what I would do would I would buy this area of support. I would buy some shares, and again just sell at the resistance. And if you see on this chart, eventually Amazon did break above the resistance. It acted as a support, or actually didn't act as a support. Let's just zoom in a little. It acted as a support for about maybe a day, and then it broke down below. Oops, let's just zoom back in. Where were we? And yeah, and it broke down, and then it kind of broke above the resistance, and kind of broke down, and then for a while it was consolidating, not really doing any major moves, and again hit this support. It bounced up a little bit, and then it kind of broke below the support. One thing to keep in mind is, again, when you're trading stocks, you're not only going to want to use supports and resistances, you're going to want to use a lot of other indicators, just to try to, make your entry a little more precise, and, just have the overall advantage. As a trader, you're not always going to be 100% correct. The market doesn't have to go in the direction that you think it's going to go, and that's key. So that's why when you're trading in the stock market, you're definitely going to want to mitigate your risk, and know when to cut your losses so that you don't lose too much and you always make more than you lose, right? And that's key. Yeah, and then eventually it broke above the support, or it became resistance because it went below it, broke above it, went down below to the support, went a little bit higher, and I would say that this would have became a new resistance. So if I were to guess what was going to happen with Amazon, I would say that around here would be a new resistance. Bounce back here, go here. It kind of just bounces back, and again, it kind of broke way below on this day. And again, support, resistance. So if that was too confusing, again, definitely hit that rewind button on YouTube so you could kind of see exactly what I'm talking about. We could do another stock if you like. Let me just try to find another example. Alrighty, so I found another example, and this stock is Microsoft. I'm sure most of you guys are familiar with Microsoft. If you're watching this video on your computer, you're probably watching this from a Microsoft product. But anyways, so again here, I would just establish supports and resistances. I would look at the chart and say, okay, every time it goes right here, it kind of falls back below. And then right here it kind of bounces back up again. If you're drawing supports and resistances, you're going to want to be a little more precise with it. Just for the sake of the video, I'm not doing it as neat as I would like to do it. But as you can see, the stock had this, like I said, you would want to see 2 instances of it kind of bouncing back to make the support, or have it being validated, right? To have it as a valid support. So once you establish as a valid support, because it held itself right over here, you would probably have your entry here and sell at this resistance. Again, the resistance has validated itself as a resistance because over here before, when it hit this ceiling, it went down, hit the ceiling, went down. So you would buy low, sell high, and then once it hits the support again, probably have another entry in Microsoft, buy it, wait till it hits a resistance and sell. And then as I said earlier, sometimes or generally old resistance becomes new support, and etc. Alrighty, and just to make this video a little bit more concise, or just more cohesive, I went ahead and found another stock to use as an example. For this example, we're using FedEx. And one thing I just also want to say is when you're setting up supports and resistances, you're going to want to use a larger time frame when looking at the chart. So for example, I'm looking at a 4-hour chart. So they're just looking at an overall bigger picture of what the stock has done. Again, I'm not going to go too deep in it. I know you guys are seeing a bunch of squiggly lines and you guys are like, what is all this? But like, I guess like I said, I'm just keeping it simple with supports and resistances. So if we see on the 4-hour chart, and I believe the 4-hour chart is 180 days. So you could see that right over here, FedEx had dropped to this point, it went up, and then eventually hit this point again. So in my head, I would validate that as a support. And you could see that when it hit this peak over here, it was kind of like a resistance based on how it came down from over here. And it came down here. You could have bought the support, sold it a little here. I know it did have a little pullback and ended up falling and making a new low, and then eventually breaking that and becoming support over here, because if you could see, it bounced off of it and just kept going up. So yeah, that was just a little tip I wanted to give you guys. When it comes to making your supports and resistances, always try to look at a larger time frame. So that pretty much wraps it up. In this video, we went over supports and resistances. If you guys have any questions, please just leave a comment in the comment section below. Destroy that like button. It definitely helps with the YouTube algorithm. And yeah, that's pretty much it. My name is Justin Furniel. I'm out. Peace.